What's good, everyone? This is Dr. Nee with Docs Outside the Box. I'm excited to have Kevin Matthews, also known as BuildingBread. He is a former financial advisor. He is now a certified financial planner, comes with all of the educational, I guess, alphabet soup at the end of his name that qualifies him. I think you graduated from Hampton University, brother. I think you graduated from, at one point, Harvard, from Northwestern University. So you definitely got the accolades. And at one point, you were a top 100 most influential financial advisor by Investopedia. It's a big deal. And then also a 5-time Plutus Award winner, which is also another big deal, man. So Kevin Matthews, man, thank you for making time for us. Thank you for Docs Out. Thank you and welcome to Docs Outside the Box.
Thank you. I appreciate it.
So listen, man, let's jump right into this because I see you've been spending a lot of time on social media, especially Instagram, as well as TikTok. I've been following you and you've been watching what's been going on. Stocks are going down, then they go up, then stocks go down, and then they go down, and then they go down, and it may go up, and then they go down, 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 down. And then inflation is going up. Gas is expensive. Milk is expensive. Bro, what's up? We in a recession?
Man.
What's going on? Let's jump right into
it. So by definition, we are not in a recession yet. Officially, we're going to find out whether or not we're in a recession come July. And the reason why I say that is because when as economists, when we say we're in a recession, we need 2 consecutive quarters of negative GDP. Okay. GDP stands for gross domestic product. That's basically the value of all the stuff and services that we produce. You add it all up, that's what GDP is. Q1, we were down negative 1.4%. Q2, we're going to find out. So all we have to do is have a negative in front of any number. We'll officially be in a recession.
And then as a result of those numbers, those indices, then stock markets and everything else kind of responds in relation to that number or whatever that indication of if we're in recession, correct?
Absolutely. Absolutely. So the stock market is our daily gauge of what we think is going to happen in the future. So the stock market is already saying, yeah, bro, it's a recession. It's the worst thing ever. It's what the stock market is saying. And they're already like jumping the gun.
It's got people shook. It's got people shook.
Absolutely. Absolutely. Just shook, in shambles, whatever it is you want to call it. So the stock market's already like, yeah, we're in recession. We'll find out if that's the truth. I would be shocked if we were not, but there are a lot of economists that say, hey, it's not going to be extreme growth, but we're not going to be negative. So we'll see.
And in inflation that we are seeing right now, is this because of what's going on in Ukraine, or we were already heading down that path already?
Yeah, so it's actually a mix of weird factors. So when you have inflation, it's basically you got too much money out there in the economy chasing too few goods, which means that your supply and demand don't match up. How do we get in this space? Well, it started with COVID. And when we had those lockdowns, people weren't producing enough stuff. People weren't going to work. So you had a reduction in supply, but that demand was still out there. So you got that. That started it. Then I wasn't paying my student loans and most people weren't either. So I was saving more money and just like everybody else than we had possible. So we had more people that had money, more people that saved money, which is generally a good thing, but it means I got more power to bid up the prices on everything else. So you've got that, you got supply chains. Yeah. So you got supply chains is an issue and you have Russia and Ukraine. And then you have the fact that we were using stimulus money, that we were saving money by not paying student loans and other things. So those 3 factors are how we got to this inflationary period right now.
How long do you think it's going to last? And is that one of the things that determines if we're in a recession? I know it's GDP that's decreasing, but is one of the signs of being in a recession inflation? Or is that a dumbass question? You can tell me.
No. So it's not a dumb question at all, but they don't always go hand in hand. There are times when inflation is high and we don't go into recession and vice versa. I think it's kind of like just a rainstorm and a hurricane, where every hurricane got some rain with it, but it can rain and nothing bad happened, right? So a lot of times they tend to go together. So inflation can definitely cause a recession because at some point, if I say, look, this shit too high, I'm not buying nothing else, right? And everybody does that, then you end up in recession.
Man, so I'm a little nervous because I haven't seen anything like this. I mean, because this is worse than Brexit, I'm assuming, right? This is worse than Brexit. This is worse than COVID, right? The stock market tumbling?
Actually, no, not yet. Not yet.
Okay.
So,
but you see how the news makes people nervous?
Yeah, absolutely. And that's the thing. I talked about this, I think, on Instagram or YouTube the other day, but when the stock market fell in 2020, I think it was as low as 38%. That's as far as it dropped. As of today, we're at 20%. We still got a
Okay.
ways to go
See, this is
if
why
this is going to get
you on the
worse.
show so that you can explain it, so you could break it down, so it'll be forever broke. You know what movie that's from?
Yeah, I don't know
You a
the movie. I know the
millennial.
quote.
Love Jones, man. So, but this is what that's why you're here, is so that you could break it down for us and let us know that, okay, should we really be like, and should we be nervous, or is just one of those things where we're at this number? News has a tendency to, make things sound worse than they are. It sounds like we're kind of in a mix, right?
Yeah, we're in the mix, and I think like the market falls like this every 7 or so years. Like every investor, and I mean every investor in life, has gone through a period in time like this. I have a 4-year-old son; he's been through a period like this twice in his whole lifetime. Like that's how common this is. Like 2020, hey, market was down, but it actually was up by the end of the year, which is strange to think
Right.
about. And then this year, we'll see what happens. But the thing is, everybody says like, "Oh, I wish I would have bought Amazon back in '97." It's like, yeah, you also would have went through the dot-com bust too. Are
Right.
you
Right.
real about that or no?
Right.
So this is like one of those opportunities that, hey, if it falls, it falls. But I'm in it for a long time.
And this is where I think a lot of people, their moxie shows up, right? Because a lot of
Mm.
people always say, well, dollar cost average, or, you're going to invest when the stock market goes down. It's going to be a discount. And it's like, well, we may be in a discount for a bit. Are you still going to be investing? And I think that's where we find out who's really in this, who's really a long-term
Yeah,
investor. You know what I'm saying?
yeah,
So,
yeah. We say scared money don't make no money. We're gonna find out.
sheesh, man. So let's take a step back then, because I wanted to save this question till later on, right? Like we're seeing that the stock market is dropping a little bit, then goes up, just like we kind of said. We're not technically in a recession yet, but we see companies like Tesla, obviously Amazon has already done it, where they are splitting, right?
Mhm.
Like the stock is splitting. Like explain to us what that means for us in terms of being able to purchase stock. And then what does that really mean when a company does that? What are they trying to do when they split their stocks?
Yeah, so let's talk about like what a stock split is. Basically, it makes a company seem more attractive. And I really want to emphasize the seemingly part.
Okay.
So, for example, if I take a $5 bill and make 5 ones, it's still worth the same, but perhaps 5 ones, depending on where I'm trying to go, might be more attractive, right?
But why would that be? Like $5 bill or a $10 bill always seems more attractive than their singles. Because I see what you're getting at, but it's like psychology, right?
Yeah, it's definitely psychology. So, for example, Amazon is, I don't know, $100 or $200 a share, whatever it is now, right? But before the split, it was $3,000 a share. So some people
Yeah,
say, "Oh my God, like this is expensive. I cannot afford this stock."
I get
Whereas
it.
now it's like, "Oh, $125, sure, I can get that." Right. So like it makes it feel more attractive. But what it does is it increases the number of shares. So you got one $5 bill, you have 5 bills, but they're all ones. That's essentially what it does. It makes it feel more attractive. Sometimes it excites investors and gets wants to have them to jump into it. But also, data shows us that usually, on average, after 1 year, a year after the stock split, the companies that split tend to do better than the stock market as a whole.
So for folks like you who like put a stack of 20 down and was able to get like a whole bunch of Amazon stock when it was 3,000, right? What
Uh,
happened?
so
I'm
so
just teasing.
yes and no, but the thing is, like for most of us, we
Right.
can still invest with what's called fractional shares.
Right. So,
So
so if let's say, for example, let's say back in, I don't know, like several weeks ago, if you had a stock, an Amazon stock for $1,000 or for $3,000,
mhm.
what does that mean now?
So now
Like
you
when
have
it's
20.
split?
Yeah, so now you have 20 of them. That's really it. So I have
Did,
one
did,
share for 3,000. Now I got 20, of those shares divided by, whatever 3,000 divided by 20 is.
that hasn't
So,
diluted you at all, or?
mm-mm.
And like I said, talk to me like I'm a fourth grader. That's why I'm asking these
Well, yeah.
questions.
So like, and that's the thing. So like the value is the same. One example I use is if I have a slice of pizza, I cut it into smaller pieces. Does it taste any better? No. It's still the same pizza, right? It's still
Got
the
you.
same value. But
Hmm.
again, it's really about making the company seem more affordable and seem more attractive, which sometimes can encourage people to jump into it. But
Got
it's,
you.
it's really just cosmetic. That's all it is.
So you're more likely to buy Amazon stock if it's $120 a share as opposed to 3K, three stacks,
Right.
basically.
Most people would.
Okay, I get it. I get it. And then, so when you see companies that do that, it almost seems like, okay, well, the stock market is going down, but then this company is splitting their stock. That's a way for them to raise money too, right?
It
Is that a
can.
good sign? And you say at the end of a year, it sounds like it's a good sign.
Yeah, yeah. So it all depends on why they do it. So some
Mhm.
companies do it just because they want to do it, they want to seem more attractive. Others companies do it because they're trying to really kind of game the system. So for example, Shopify is doing their split, I think at the end of this month. They're doing it so they can help their CEO retain control of the company. So Shopify, I don't know, that was a different story. But most cases, it's we want to seem more attractive, we want to seem more affordable, and we want to kind of ingratiate ourselves with more investors. So let's split, let's try and grow the value of the company a bit more.
Is that what's going on with Tesla? Because I mean, I don't know if you can really tell what's going on with Elon. Like he's all over the place.
Yeah. So, and that's another question mark. So the first time they did this was like 2 years ago. I think that was a genuine stock split. I think that made sense. This time around, I don't know. It sounds like Elon is trying to raise more money
to buy Twitter or
Tesla,
something
to spur something on. Because I'm like, bro, you're doing too much. You're doing way too much.
Yeah, he's doing a lot. And then what's going on with Twitter? The way in which he's starting to back off and say, well, if you don't show A or if you don't show criteria B, then I won't buy it. I'm wondering if because he had so much in Bitcoin and Bitcoin is going down, he may not got it like that anymore. And maybe he's just kind of trying to use these excuses to say, hey, if you don't show this type of information to me, then I'm not going to purchase, when maybe the underlying thing is he ain't got the money or he ain't got the bread.
I think so. I think that's a big part of it.
One for Darko. See, I got this financial stuff. All right, go ahead.
Yeah. I think that's a big part of it. I think he's stretching himself too thin. And I think it was a dumb move to begin with. Like Twitter doesn't really make that much money. So what was the point in you buying it to do what? Like for what? But then also you cannot be
flex.
Yeah, something. Right?
Yeah, it was a flex.
But yeah, so like you also can't be the CEO of a good CEO of 3 different companies. And I'm making an assumption here, but like as a doctor, I don't think you can specialize in like 3 totally completely different things. Like, can you be a dentist and a brain surgeon and a chiropractor like all at the same time?
No,
I don't know.
No, I mean, it's the simple notion of like jack of all trades. I think the closest thing is, like ER physicians can handle so many different types of patients, but for the most part, they see it over and over and over and over and over again. Trauma surgery, we take care of patients who are injured, but we see these things over and over and over and over again. Whereas, he's just jumping into this.
Yeah. So and you can't, and they're not related. Like at least as an ER doctor, it's all medical. Right. So like you can't be like social media CEO, especially when Jack Dorsey, the founder, couldn't fix it. So that's number one. The person who built it couldn't fix it. But like social media CEO,
why can't I still edit, man? We can't edit a tweet. Come on.
But man, bruh. And I'm damn sure not gonna pay for it either. So don't try that with me. So like you can't be like SpaceX CEO, take us to the moon, and then also car revolutionary vehicle CEO and then social media CEO all at the exact same time. Like that don't work. It does not work.
Yeah, I think a lot of people kind of have a little bit of some lust, a little bit of some, they put him on a pedestal and think that he can't do any wrong and stuff. And yeah, I agree with you. 3 different companies, 3 different major companies being the CEO. And, remember those stories from 2 years ago where they were saying he was sleeping on the campus of Tesla and making sure that they were producing and getting everything out on time and so forth. And like, he can't spread himself. He can only spread himself so thin. And obviously there's some allegations that are going on also that are going to muddy the water also. So
yeah. And he's also not helping himself either. And I think Twitter is making it worse for him. So for example, he was like, you got to be in the office 40 hours a week or something like that. And then he also was saying, I feel super bad about the economy, so I have to lay off X amount of people. And like Microsoft and Google are like, bet, do that. Because I will snap up those employees very, very quickly. And the backbone of any company is the value of its people. Right. So if you want to let them people go, they're going to take their money. They're going to go to Google, Amazon, Facebook, wherever else. And you're going to see Tesla continue to fall. So I think that split is like, hey, let me distract people from the fact that this Twitter thing is not working. Let me see if I can grow my money just a bit more and kind of take the heat off of myself.
Okay. I like that perspective. It makes sense. All right. So for the listener right now, we talking about med students, residents, attendings. We even talking about some pre-med students. They are all busy. So right now there's a lot of noise going on. We just covered if we're in a recession, what's going on with stocks, what's going on with all this stock splitting. It's a lot of stuff on social media. What do you think they should be doing right now? What should they be doing with their money? Should they be saving? Index funds? Take us through all that.
Yeah, I think the main thing is to remain calm. I think that's the number one thing.
That's a good point.
Yeah, because whether it is excitement, like, oh, stock split, let me just jump out here and do that, or fear, let me just like jump inside and do nothing. Like just remain calm. There is nothing out there that you need to immediately jump in and do or not do.
Despite what social media says.
Oh yeah, despite what social media says, despite what your notifications or your timeline says, you always get that one uncle that tells you to do something stupid.
And serious FOMO. There's some serious FOMO with Instagram. If you just swipe up and you just see it, oh man.
Yeah, and those apps are designed for that. The media, the news is designed for that, to catch your eye and keep you in front of the TV. So that's the first thing, remain calm. The second thing is, I think dollar cost averaging in index funds, especially if you are busy, is the absolute best thing you can do. Okay, because it's going to
give us a little review again. What's dollar cost averaging?
Yeah.
What's your thoughts on index funds? Take us through that. We don't mind a review.
Sure. So let's start with dollar cost averaging. Dollar cost averaging is essentially putting in the exact same amount of money on a regular schedule. Some people it's every 2 weeks, 1st and 15th, once a week, once a month, whatever it's going to be. I'm putting in $1,000. I'm putting in $10,000 every single time on these particular days. The advantage there is that you don't have to time the market. You don't have to guess, oh, is this the right price? Is this high? Is this low? You take all of that out of the equation by dollar cost averaging. So that's number one. So whether you can do this automatically and say, hey, look, invest in X, Y, and Z, $1,000 every single time. That you can do. That's the first thing. And it takes you out of the everyday, like, oh, let me check my phone, let me check my account. You don't have to do all that. You don't do none of that, right? Just dollar cost average, walk away. So that's number one.
And the apps make it easy for you to log in and check them and everything. Robinhood to, I got you on that. Okay.
Yeah, so that's number one. Number two, index funds are still your best friend. An index fund invests in an entire sector of the market. You've got some like the Vanguard Total Stock Market Index Fund, which invests in basically every single company in the US. The advantage here is that I don't have to be right and say that Facebook is better than Peloton, or that Google is better than, I don't know, Microsoft or whatever. I don't have to put the pressure on myself to choose what companies are going to be the next great thing and which ones are not. I own the entire thing. I'm a basketball sports fan, and I'd rather say I'm a Laker fan. I've been a Laker fan since like 1994.
Bruh, what's up with your team, man?
We won't talk about that. This ain't ESPN.
We can make it ESPN. Yo, what's up with your boy Anthony Davis, man? Anthony Davis is bad stock. He is driving your Laker index down, bro.
Look, you are correct, but I think Russell Westbrook is also broken apparently. But look, hey,
and then LeBron is your winner.
Yeah, so I diversified. So
you could be a Knicks fan.
Oof. That's real broken.
Yeah. My bad. I interrupted you, man.
No, you're fine. But the point of bringing that up is that an index fund would be, I own the NBA. I don't own a team. I don't have to be right about a team. Right. I own the whole thing. I really don't care who wins because I own the whole thing. I like that
analogy.
So with an index fund, I don't have to be right about, well, what if Tesla doesn't come back? Fine. I've got 3,000 other companies in this fund. And on average, I'm going to be right more often than I am wrong. So that is the beauty of index funds. So dollar cost averaging inside of an index fund is the path of least resistance. When I was an advisor, this was the majority of the millionaires I saw. And it's the easiest thing you can do, especially if you're busy.
Why are you flexing, man? Why are you flexing, bro?
I just got to tell
the millionaires he saw.
I'm just saying, like, they bring me their receipts. I'm like, all right, I see how this works, right?
That's good. I like it. That means it shows you that you know what you're doing, though. So it's
absolutely.
Good.
And I think you could. There's one thing like my own personal experience of what I'm doing, but it's also I've seen it replicated dozens of times, and I can see from if you're young, you're still in med school. I'm telling you from experience of seeing people 40 years from now and how they got there, and looking at the DNA of what their accounts were made out of, what they did, and to help them to further their wealth.
So the medical students who are listening, or even the residents who are listening. So if you're a resident, Kevin, just so you know, like they graduated from medical school now they're learning how to be a doctor. Probably on average, they're making anywhere between 30,000 to maybe 50,000, maybe a little bit higher, depending if they're in a large city or not. So you're saying that for them, they should be invested, and depending on where they're at, their residency program may or may not have like a 403B. So you're talking about investing in an index fund in their Roth IRA Or talk to
across.
us where they should be doing that.
Yeah, you should likely do that across the board. So inside your 403b, you almost only have choices of index funds there. So you
Sure.
definitely want to do it there. If you have a Roth IRA or just a traditional individual retirement account, so those are your options, do it there too. Any account you got, it is okay to put as much in index funds as you choose. Again, path of least resistance, the easiest thing you can do. And you want to get as much money working for you as possible. Most people are saying about 15% of your income is good. Anything above that is even better.
Okay. And the reason I push residents to start because, so for me, I didn't start until I became an attending. And for me, I came from, just our first generation immigrant family, never really had much money. And then all of a sudden, I feel like the stakes went through the roof when I became an attending because now I have this money. I don't want to mess it up. And as a result, I didn't want to mess things up. I have a bunch of student loans. I didn't know what to do with my money. I stuck my head in the sand. Or I hired someone who didn't know, or excuse me, I hired someone who really didn't have my interests at heart. So I didn't make the mistakes that I should have made in residency so that by the time I should have walked so that I could run. You know what I'm saying? So I always try to get the residents to understand, like, if you start investing now, if you start when you have a lower amount of money, it's easier to make those small mistakes than to want to make really big mistakes when you feel like the stakes are higher. So I agree with you. Investing in the index funds in your IRA, investing in index funds if they decide to open up like a brokerage account, like we're talking about, like with Vanguard or with Robinhood, and you want to buy some index funds, go do it through there. So I definitely appreciate you expressing that. Now, with the recession, with all this stock splitting, with all this noise, some people's loans are getting forgiven, mainly like the for-profit schools. What are your thoughts on how people should be handling their loan situation right now, particularly people who are like 150K, 200K, almost 300K in debt? What are your thoughts on what they should do about their loans right now? Should they pay it off? Should they wait? Because I don't think loan forgiveness is coming for those folks, but I'd like to get your thoughts.
I mean, you call Moneybag Joe right quick. It's what we need to do.
You call him, man. That's your boy.
Man, I'm not the one with 300K though. Man, so y'all way smarter than me. But in either case, the realistic solution here is to try and achieve balance. There is a fight between depending on where you are on the financial spectrum in terms of like who says pay off all your debt first and who says like balance things out and invest while paying off your debt. I'm really on the balancing piece because the most important thing is time. Time is your most important asset. And if you were to say, I'm going to sit here and pay off all my debt for however long that takes, let's say it's 5 years, let's say it's 10 years, let's say it's even 3 years, you're not going to be able to go back and say, hey, let me go back and get the stock market prices from 2019.
Yeah,
and let me go back to that. You don't have that opportunity. So for example, I forget what the exact stat is, but like the stock market over the last 5 years has been up over 100%. Yeah. If I just did all my debt and didn't invest anything, I'm never going to get that time back. And in fact, it is going to be harder for me to reach my wealth goals once that time is gone. So for example, for my kids, I'm investing about $100 a month for my kids. They're 4 and 1.
Good for you, man. Good for you.
Appreciate that. Thank you. So they'll be, by the time they're around my age, about 35 or so, assume they did nothing else, just $100 a month, they would be millionaires by, again, about age 35 to 37. If they wait until they're 18, if they wait until they're 20, that means they only have 15 years to do that. And they're going to have to invest like $2,500 a month. They may not have that just laying around at 18, right? So, and do that every single month. So it becomes more expensive and a lot harder because your time frame has been condensed.
The power of compounding.
Yeah, definitely. So my thing is, let's say if 15% is the goal and you can't do 15 because you got student loans, bring that down a little bit. Let's say, let's do 10, let's do 7 while attacking the student loans at the same time and slowly increase that amount.
But what about in these situations where like they're putting a pause on things, where they're doing like these extended forbearances and interest is not building at this point, right?
Right. Yeah.
So should you pay or should you wait? Like that's the part that I think a lot of people with high debt are concerned about. What's your answer on that?
Yeah. So for me, I wouldn't pay. I would take as much as I can, because if I know I have to pay, in a few months or even a few years, then I want to put as much in the market as I can now and let that continue to build. Because technically,
so you're saying divert your money from loans to
Yeah,
Investing,
to
saving.
investing,
Okay,
to
investing.
investing and saving, because
Okay.
you want to have your 3 to 6 months of your rent or mortgage. So you've got that secured and you're investing your money, because those things are going to take care of you regardless of what happens. Right. And I would rather invest the money and park it and let it run and just grow. And then when the loans come back on, start to do both at the same time, because you're literally not being penalized at all because you're not paying interest. So while it can help you to a degree, I think you're going to be more benefited by taking advantage of time.
Okay. All right. So me and my wife, we paid off almost 700K in 3 years. But what we were able to do is we were able to go ham on the loans, but we
Mm-hmm.
still were able to take like 20% of our money. We maxed out our 401ks,
Mm-hmm.
right? We did that. And then we maxed out our traditional IRAs, and that was it. And then we had an emergency fund. And then after that, we went ham because we had some
Yeah.
private loans of up to almost 190 that were anywhere between 190,000 that were between like 9 to like 13, 14%. So
Mm-hmm.
we were getting killed there. And then we also had like at least the rest, which was anywhere between like 500 to 550, that was in consolidated loans, the good old
Mm-hmm.
days when it was like 2%.
Right.
Right. So for us, it became a combination of emotion as well as mathematics.
Mm-hmm.
And we just didn't want to be tied down to a lot of things,
Right.
and definitely not tied down to our specific job or the location. And we felt like we moved to a specific location because we didn't have any money. We felt like we were broke.
Mm-hmm.
So I agree with you with the balanced approach. But I always just let people know that we were a little bit less than balanced. We went a little bit harder on student loans so that we can get it out the way. And we really valued our mobility, but we still invested. We just didn't put, that significant amount of money into our brokerage account. We just focused on the deferred tax account, taxable,
Which,
not taxable accounts.
yeah. So to me, that is balance. Like if
Okay.
if you
Got
were
you.
able to absolutely, like we're talking more than 20, close to 26 or $27,000 a year between the maxing out the 403b and an IRA. So
Right.
like to me, that's perfect balance. It's even better than most, right? So if you can hit those two bars and you still have money left over, I would absolutely go as hard as I could on the loans if I can do those two things at the same time.
So low key, I heard you say in the beginning of the interview, the talk, you were saying that you have still student loans. What's your plan? How are you handling what's going on right now with the forbearances, with student loans possibly being forgiven? How do you handle yours?
Yeah, they get paid off eventually.
Okay,
So
I got you. Okay.
but no, like I have for undergrad, it's like $3,000 left. Like
Okay.
it's so I'm really not pressed at all. But the thing is, my net worth has grown so much because I was able to put so much more towards investing while slowly throwing a little bit at the student loans at a time. So for me, like, but again, like 3,000 is not much compared to 300,000 or 700,000. So it really depends on where you are. But I've taken advantage of having 0% interest the last 2 years. But the amount of money I've paid off on my loan during this time compared to my investing is at least double.
Got you. Okay, so you're still paying off something, but you're not going hard like you were before, and you're just shifting significant amounts into it,
Mm-hmm.
into investing. Okay, that makes sense.
Right.
All right, so let's take a step back. So you talked about the advice for busy, you know, residents and so forth. And they are probably looking at us. They're like, yeah, I get what they're saying. Calm down, invest in index funds, but I still don't get it. Like, explain to me how I even start an account and what index funds do I buy? Talk to me. Like, I heard you say Vanguard Total Stock Market. Even before that, talk to us about that. What do they need to do? Because they're busy. Like, they come home, they get to work by 5, they're getting home by 7, and they still got to study. They got to get ready for presentations, and some of them may be taking 24-hour call. So it's really difficult for them to really grasp maybe like a 30,000-foot view. Take us a little bit more granular if you can, please.
Yeah. So I'll break it down. So the first thing is, again, if you have a 403b, that is your number one place to start. A lot of people don't think, for whatever reason, it's like, yeah, I don't invest. I'm like, do you have a 403b? Do you have 401k? I was like, yeah. So that is one place to start. But essentially, you open an account. We'll talk about the types of accounts in a second. But 1, you open an account. 2, you put money in it. And then 3, most importantly, you select what investments you want.
Yeah,
Those are the 3 steps.
I heard about people transferring money into their account, and then that's it. They don't buy an actual index fund.
Yep. So I've had a client that did that. She came in. I think she She worked at a department store for like 30 years and came in. Said, "Hey, I've got like $300,000. What can I do about retirement?" Literally retired like next 2 or 3 years. I'm looking at it. I'm like, "Man, this is 99% cash. What have you been doing this entire time?" And it was just, she said, "I opened it, I put money in." I'm like, "But you didn't choose any investments in 30 years."
Did you have to duck when she threw something at you, or?
I mean, she thought it because I wasn't around for 30 years. So at that point in time, so it wasn't on me. I mean, it was an unfortunate conversation, and we, tried to make some changes and stuff. But those are the three steps. You have to complete all three. Don't miss out on none of them. So you open the account, your options, you got your 403b. It's going to be your largest tax advantage account. So that's one option. You have your individual retirement accounts, Roth and traditional, and then you have your brokerage. All of them have different advantages and disadvantages. You can open them all.
Okay.
So I want to put as much money in as many buckets as I can. So do that. Then select your funds. We talked about index funds. One of my favorite that's the Vanguard Total Stock Market Index Fund. Again, it owns.
So that's VTSAX or
VTI.
Okay,
yep.
Very good.
Yep.
So y'all listening? Y'all listening to this? This is a masterclass. Take notes, y'all. So VTSAX or VTI is the one that he prefers the most. Okay.
Mm-hmm.
All right.
So I've opened my account. I've put deposited money. Again, 50% is like the standard, but do what you feel is comfortable, and the more is always better. So you've opened the account, you've deposited money in it, you've bought that fund across as many accounts as possible. So that makes you like bare minimum basic investor there. So those are the steps to at least get started.
Okay. All right. So the next thing that I want to jump into also is the next noise is Bitcoin.
Mm-hmm.
Right. So, obviously back in 2009, 2010, people were laughing at you when you mentioned Bitcoin. Some of them had the last laugh over the last 10 years, definitely over the last, 3 or 4 years, they've been laughing, and to the point where crypto's made so much money. I think that's part of the reason why Elon Musk is flexing, right? Like he's got so much money that he can do whatever he wants. Like people who own crypto are buying, they changed the name of the LA, your Staples Center to the Crypto Center, right?
Oh my
like
God,
there is just flooded. Like I think that's one of the things that I think 5 years from now, or maybe even sooner than that, there's going to be a huge expose of what the pandemic did with the shifting of money to even more rich people, and how much more money they got, whether it's through whatever means, but definitely crypto was one of them, and how they are able to spend money for who knows. Like, I mean, you could trace it down to NLI with the name, image, and likeness, with athletes and all of these different boosters spending all of this money on these athletes. Like a lot of their money is coming from either crypto or it's coming from oil. There's just a significant amount of money that's out there. So what are your thoughts on Bitcoin? Because what I heard over the last 2 years or 3 years is that it's transformative. It's a way to quickly traverse, classes and so forth, but it's struggling right now. It's down to 24,000.
Yeah. Bitcoin is struggling hard. Depending on what time y'all are listening, like it's down at least 50% from where it was last year. I think Bitcoin is a weird thing because I think Bitcoin has some of the most enthusiastic investors on the internet, which is it's just crypto as a whole, which is weird.
And mayors.
Yeah. Like I invest in Microsoft. There is no Microsoft gang out there. Like, how dare you talk bad about this stock? Like, don't nobody care. But you say something bad about Bitcoin on the internet and they will come for you. Yeah. And they'll tell you that Bitcoin can do all these amazing things. I am neutral on Bitcoin. I have about 1% of my entire portfolio in Bitcoin, and I'm gonna keep it. But I look at my risk and I see what that investment has done. I'm like, I'll give me a little bit. If it goes up, great. If it doesn't, it's not going to throw off my entire life plan.
Right. So if you had $1 and you put 1% or 1 cent into Bitcoin and it falls, like that's not going to hurt you.
Exactly. Yeah, exactly. And I've been saying this for years. Like I was trying to get up to 3%, but obviously it fell. So, I'm trying to get up to 3%. And I'm like, all right, I got it. I'm exposed to it. If it does well, great. If it doesn't hurt me. Do
you think it's transformative?
yes and no.
It's like, did you believe all that stuff where people were saying, hey, it's going to take people from the lower class to the, like,
No, I ain't believing that mess. Because my thing is, and maybe even similar to you in your field, as someone who's gotten a degree in economics and a master's in business, I've been able to study the stock market for a minimum of the last 10 years. And I'm using data and theories and textbooks and stuff that cover the last 50 years. I know what I know, right? And it's been tested generation after generation. Bitcoin hasn't been around long enough for any of these people to know anything, in my view, right? Like people said 5 years ago, Bitcoin is digital gold, is a hedge for inflation. Inflation is up, Bitcoin is down bad. That don't make sense.
So basically what they were saying is if inflation went up, that Bitcoin's value should go up.
Exactly. Okay. So it was kind of like, like back in the day, quote unquote, like when inflation was up, gold is where people went. It was like, it's a safe asset. I can hold it. The value of gold gets better. That's not the case. That's what everybody said Bitcoin was supposed to be. And that hasn't been the case. They said that because it was decentralized, there was no governing body like the Fed, that Bitcoin was going to be an asset that was going to free people. You could do whatever it is you wanted to do. Well, we've had apps like Celsius and others completely shut down and say, look, you cannot withdraw your money because we're going through some stuff. Sorry. And it's like, well, wait a minute. Y'all,
this is supposed to be like digital cryptocurrency that you cannot track. I want my money, right?
Yes. And the funny thing about them was that they, on their website, they said, before this came out, it was like, be able to access your money without, restriction. It's like, what are you talking about? Right? Like this was decentralized finance and they are not regulated like banks. So if they decide to just up and leave or close, you have no guarantee to get your money back. But that's what you wanted. That's what y'all told me Bitcoin was. You told me cryptocurrency was decentralized, free, open, all that stuff. And I'm like, yeah, we'll see. I'm patient enough to give it another 10 years to see if that's going to be the case. But so far, it hasn't lived up to the hype.
Yeah. Yeah. I recently listened to, I think it was Vice or NPR, and they were talking about how, a lot of these mayors, particularly the mayor in Miami, they created their own, or he created the city's own type of Bitcoin called like Miami coin or something like that, and attached like a significant amount of utilities and significant amount of just spending on things that normally need to occur in the city related to Bitcoin. And now that Bitcoin has dropped, like he tried to make Miami the next like haven, basically, for, investors in Bitcoin and all of these miners in Bitcoin to come here or go to Miami. That's not panning out, and they're losing significant amount of money. And I don't know, I don't know if it's transformative. I have no clue. I actually think and invest the same way as you. I have $1, 1% of it will go towards Bitcoin. And if I lose it, then it's 1 cent that I lost in comparison to my entire profile of my portfolio. I do believe in the blockchain, like that technology. Yep. I do think that there's something there, but I just think it's mad early. And I don't know, man. I agree with you. Like, you just got to go with tried and true right now. The NFTs and all those things, I don't know. But
it's at the end of the day, it's about what does this thing do? Not what you think it'll do, not what you think it has the potential to do. What does it actually do? And how is that thing valued? So why I usually lean more towards the stock markets, because like if I'm investing in Apple, as long as they making iPhones, as long as y'all buying them, it makes sense. The stock goes up. On the opposite end, Netflix is losing subscribers. Like, oh, that makes sense. You make content, people watch content, stock goes up, right? That's just what it is. Bitcoin doesn't really do anything. Like I can send you money back and forth, but like it doesn't. There's no CEO of Bitcoin. There's no revenue reports for me to like analyze. It just is, and it goes up when people feel good about it. And it goes down, people don't. That's not good enough for me to be investing a significant chunk of my income in just based on what likes and popularity. Like if it weren't for Instagram and Twitter, would Bitcoin even be as popular as it is today?
That's a good point. That's true.
I don't know. Right?
That's a good point. And when everybody's jumping in, that's when you should be like, it's already mature.
Right, definitely.
Yeah, I need to moonwalk. All right, how about this? Like that's another thing that's bringing a lot of noise. Here's something that's not bringing a lot of noise, but I think it can. This is not life-changing, but I think that Treasury I bonds can have a place in a portfolio at this moment, particularly with inflation going up. What are your thoughts on that?
Yeah, I think so. They do have a
And
place.
tell us what that is, please.
Yeah, so they're called I bonds. They are inflation protected bonds. They've been around for decades, but obviously with inflation being high, now people are paying attention to it. And
Hmm.
basically, what it is a bond, which is basically a loan to the government where they promise to pay you back. They're the safest asset out there. As long as we got taxes, you're gonna get your money back. So essentially, what they do is they are going to guarantee you a rate of return that is adjusted for inflation. And now I think if I remember correctly, it's like 9.62% guaranteed return, which is pretty good.
And how does that pay? It pays over six. Is that like every 6 months you get 9.62, or is that every month? How does that work?
It is. It's an annual rate that is paid out every 6 months, if I'm not mistaken.
Gotcha.
But there are some asterisks, an asterisk plural. I don't know what the word is. There are some things you need to know because it's being hyped as like you can get 9% guaranteed when the market is down terrible and inflation is up. So remember when they created these, they give you a set rate which is really low, and then an inflation adjusted rate, which basically says inflation is here. I'm going to guarantee that you're going to get more than whatever inflation is at that point in time. So right now it's 9 point whatever it's going to be. You can only invest 10,000 per year.
Okay.
So
it's limited.
It is very, very limited. And for you to receive that interest, you have to have it for at least 1 year. It's not something where it's like, oh, let me put my money here, like my savings. Let me put my savings here, and then in 8 months, let me withdraw it. You do that, you're not going to get anything out of it.
So if it's like your emergency fund and you need your money, you can't just write to the government,
that's
hey,
not what you want to do.
I really, really need it. They're going to be like, nah.
Yeah, you're like, all right, well, you just wasted 8 months of your time because you can't do nothing with this.
So not a place to park your emergency fund then, probably.
It is not a place to park your emergency fund. If you got your emergency fund set, you're already investing, and you got some extra, you're like, well, what do I do with all this extra money? Then you can put some there, and you're at least not going to lose money to inflation. Those are the situations where it makes sense. But nobody's going to get rich off of them because you can only do $10,000 a year. The other part of this is that, let's say, and I don't think this is going to happen, especially not in the short term, let's say inflation will wipe out tomorrow. You're not getting 9% after that. That is a variable rate. So now you get 9.2%, but in 2 years, it's going to go down to whatever inflation is going to be at that point in time. So you have to really pay attention to that part of it too.
So if inflation goes back to what the normal levels are, we're talking about your money's just basically sitting there.
Yeah, just sitting there. You will, quote unquote, never lose money to inflation, but you may only get like $1 or $2 above what you would have gotten in like a savings account or something like that. So again, they're solid. They're not a bad idea by any stretch of the imagination. I just think, at least on Twitter, it's a little overrated where people are thinking like, oh, I'm going to be rich. It's like, you can only do 10,000. Like I will take, if I can guarantee 9%, yeah, I'm gonna take that. But like after a certain point, that's not going to like make or break you.
Got you. So it's not 9 point whatever percent or however percentage it is. That's really great. It's not like that in perpetuity. It is.
Yeah, it is
variable.
Not.
It changes every 6 months. I'm assuming. Right?
I think so.
Okay. All right. And then you just go to the U.S. Treasury. We'll put the links in the show notes for people to find out.
Yeah, it's like USA Direct Treasury or something like that.
All right. So what's Kevin Matthews invested in? Tell us what you do.
Yeah, I do all the things.
All right.
All right. So I obviously have the majority of my money in index funds. I rebalance, so I go back and review my investments. I think this is important twice a year. So when I talk about like you don't have to check your account every day, I don't. I don't. And that's because like even when I sit down with clients, we have like a quarterly review 4 times a year, a biannual review twice a year, or just once a year. Like me being in there every single day is not going to help me. It's not going to help you, and it's only going to cause you to overcorrect for certain things. So the last time I checked, and I check at the end of June. So in a few weeks, I'll go back and check.
Okay. But you don't want that pain right now, do you?
I certainly do not.
I got you.
That's how I can stay invested because like I don't have to stare at this every day. But in either case, about 70% of all of my money is invested in index funds. So that's number one.
You said 70%.
Close to 70%. Yeah.
Got you. Okay. Makes sense.
So,
okay.
Yeah. So that remaining 30%, that's where I have a few individual stocks. I'm a big fan of, these are not recommendations, but I'm a big fan of Microsoft and Google. Those are some of my all-time favorite stocks. And I'm really looking at Costco is kind of that mid-tier that I really like, but I'm looking at companies that tend to do well in potential recessions and tend to do well when the economy is trying to figure out itself.
Why Costco? So is it that people just tend to buy like in bulk when they're in recession?
Well, it's not as necessary as they have to. Like in some cases, like some people just have a larger family or what have you, even businesses, you're catering and stuff like that. You go in bulk, but also they have that membership business where you cannot go. Costco's still going to get paid. So it's companies like that. That subscription service is something that I really liked about Costco. They did incredibly well in the pandemic. They did well last year. And this year, I mean, almost everything is down. So they are down this year. But it's one of those companies that tend to like weather the storm, most storms anyway. So those types of companies are the ones I really have an eye on right now.
So help me understand Microsoft, because I just feel like how is Microsoft still winning, but from a user standpoint, like it looks like they're losing, right? Like their cell phones suck, so they don't sell cell phones anymore, right? So they're not in the mobile game. Well, they're not in the mobile phone game. Nobody, or not nobody, but a significant amount of people are preferring Apple than Windows, right? Windows is becoming less and less relevant. Google has entered into the game. How is it that Microsoft continues to win? What do they do? Is it what's going on? Is it like is it their back end? Like is it the cloud gaming or the cloud stuff that really separates them?
Yeah, so they have a few things. First, RIP to Internet Explorer. It died today. It should have died a long time ago, if we want to be honest.
Internet Explorer is literally typical of like Windows 1990, 2000, just stagnation. Like it is like, right? It is the epitome of like, why are you sticking with this program that just sucks?
Why are you still here? Like,
right. Damn, you right on that.
Kind of like, what was it, Sister? Like, go home, Roger. Like, why are you here?
Rest in infamy. I don't care. I'm not saying rest in peace, man. I left that narcotic in like 2006, 2007. I went to Firefox. F that, man.
Yeah. Whenever I found out about Chrome, I haven't been back.
Yeah.
So a few things about Microsoft. So I had to go back and find this tweet. So after 27 years, as of today, Microsoft has ended the life of Internet Explorer. It's gone up yonder. But essentially, if you invested $1,000 when that went out, when Internet Explorer started, you'd have about $102,000. $112,000 today. $1,000 one time, left it alone. Okay, if you just invested just $100 a month, which is very low, just $100 a month, you'd have $623,000 from Microsoft.
Really?
Which that ain't right. You're like, all right, well, let me look at this. Okay. But the thing I like
you got me interested. Okay.
Right. So here's the thing. Here's my pitch for Microsoft. So they're in gaming with Xbox. They're Xbox One. I don't have one. I'm more of a PlayStation person myself, but what?
You got PlayStation 5?
No, I've been trying to get one.
I was like, if you got a plug for PlayStation 5, let me know.
Like, if I was a plug, I would have been there one.
You want to talk about hedge against inflation? I got like 9,000 PlayStation 5s that I'm selling. That's how Kevin is making his money.
Right. So they own Xbox. They also own Skype, which I feel like should have been Zoom, but that was a missed opportunity. So
they missed that up.
Yeah, they totally missed that. But don't forget, like their computing business. Like while people prefer Apple when it comes to Macs and iPhones, those are obviously much nicer. Windows still has a foothold in the market. Like the fact that we all know Outlook, as much as we all hate it, as much like it's still a thing. And then they have a lot of government contracts too when it comes to AI, and they have their entire Microsoft Azure cloud computing platform. They did a contract with the defense for like AI training software to help soldiers like understand the battlefield and all that kind of stuff. They've been around forever. I don't really see them going anywhere. And they're in a business where it comes to like hardware and software that's really hard for even Apple to penetrate. Like Apple has a nicer looking business, but sizably, like Microsoft is blowing Apple out the water.
All right. So as we're talking right now, I just want people to understand this, because I think the other thing too is people get a little bit, they get concerned. Well, now they're going back to talking about individual stocks. So I'm going to type in holdings of VTSAX so people can really understand how this works.
So I'm going to see how many I've memorized from that one, from the top 10.
Okay, let's go.
This is just from memory. So Apple, Microsoft, Amazon, United Healthcare, Berkshire Hathaway, Nvidia, Johnson & Johnson.
Damn, you pretty much got it to the T.
Yeah. That's at least 7 out of top 10.
Yeah, you got United Health Group, which is a big, large HMO that's in there also. But you
Hmm.
got significant Tesla. So basically, everybody, what he's saying is as much as he's talking about individual stocks like the Amazons, the Microsofts, Tesla, if you buy VTSAX, which is an index fund, that stock, that Microsoft is already in there. Apple's already in there. Tesla's already in there. And it's weighted, right? It's weighted
Hmm.
based off of how they're performing. So in that stock, like it may have what, like maybe, I don't know, I'm making the numbers up, but like 10% of it or 4% of it is in Microsoft. And so a significant amount is invested in these individual companies, but you're doing it as an index.
Yep, and that's the thing. Like, what if I'm wrong about Microsoft? I
Right.
might be, but this fund has all those other things that I
Right.
named, plus even more. So yeah, so like you don't have to like sit here and do all that research and memorize what's in it either. But I can get that one fund, it's gonna have it in there. And if they do well, then my fund is gonna do well too.
I love it. I love it. Listen, we covered a lot. And we got some really good information from you, and we definitely appreciate it. But we saved the best for last. All right. Let's have some fun a little bit. Let's talk about your favorite magazine growing up. You know, for me, it was The Source. For you, I'm assuming it was Rolling Stone. You know what I'm saying? I'm teasing you. So Rolling Stone released their 200 greatest hip hop albums, causing quite the storm on the internets. Um, yeah, this list is jacked up. This ranking list is jacked up. Already, I'm gonna list what the mistakes I see. MC Light, her album is in the 180s. Common is in the
Ooh.
140s. Nas, Illmatic, which was one of the greatest albums that kind of transitioned and changed the way in which people rapped and how music and how basically you listen from an album from the beginning to the end was like it was ranked behind Cardi B. Um, this whole
Wait,
thing
what?
was ranked wrong. And as someone who is a huge Outkast fan like you, I think Tribe Called Quest is better. But I get it when people think that Outkast is the bomb. But Stankonia, AT Aliens is not even on the list. I don't believe.
I don't think they were, but I'm be honest with you, like I was so mad at the list. I was like, I can't even. I'm not even gonna go to 140. I looked at the top 10. I was like, look, if X, Y, and Z album made here, this whole list
Yeah,
is trash, and the whole list was trash. But like,
yeah.
of all the Outkast albums, nobody is. What did they put? Stankonia, like
Stankonia.
yeah,
Yeah,
and it was a good album, but like, I don't think most people would even know that one.
yeah.
If I were just like throw a dart at an Outkast album, that ain't gonna be the one.
That's not the one they're gonna choose. I agree with you there. I agree with you. Public Enemy, I agree with. Biggie's album, yes, I agree with. There's some others in the top 10 that I agree with, but there's some in the top 10 I'm like, they don't even belong in the top 200.
Yeah,
There's a bunch of things that I'm just like, man, like, it just seems like, just between me and you, it just seems like it's whatever album sold the most. I mean, just because an album sold the most doesn't mean it's the most influential. I even think
it's not.
like Lauryn Hill in the top 10, I agree she'd be in the top 10. I think she
Mhm.
should be even lower. I think she should be like higher up, like maybe in the top 7.
Yeah, I definitely think I was glad to see her in the top 10. I would have definitely slid it higher. And so I had this debate with my text group. This was Missy Elliott as an
Yeah.
album? Like I
Yeah.
don't
Yeah.
honestly,
No.
I can't name
No.
I can name a bunch of Missy Elliott songs, and she's
Yeah.
an amazing artist. She has amazing videos. Like that was her music videos were like my entire childhood. So
Right.
no disrespect to her art, but I cannot name a single, I guess, outside of Misdemeanor, which I guess I would put that up there if I was going to put any album. But like, I don't think people think like, oh, Missy's albums. Like, I don't hear nothing about any of her albums ever. Like, top 10?
Tupac is not in there. Is not even in the top 10.
Yeah,
Yeah.
I X'd out before I even noticed that. I couldn't.
Let's just leave it. Let's just leave it there. And basically, the stock of Rolling Stone is down, right?
Absolutely.
It's
Down
down.
Peloton.
Man, listen, Kevin Matthews, this was a dope conversation, man. I really appreciate you breaking down a lot of things for us busy professionals. And listen, I hope we can do it again, maybe get some questions, because we get a lot of questions from the audience as to how they should attack their student loans or how they should attack their student loans and also invest. Or, should they even go to school, professional school, knowing that they're going to get all of the student loans? So I would love to kind of throw some of these questions at you and bring you back in the future if some of these questions pop up. But nonetheless, man, thank you very much for coming on Docs Outside the Box. How can people connect with you, watch what you put out there? Tell us all of that.
Yeah, you can find me on all things social media at Building Bread. You should definitely follow me on the YouTube channel if you're more of a visual learner. We do brand new videos Monday through Friday covering everything in the market. So you can catch me there and literally anywhere else, and also at buildingbread.com.
All of those links will be in the show notes, folks. This was a treat, man. Kevin Matthews, thank you very much for coming on Docs Outside the Box, man. We're going to catch you guys on the next one. Make sure you guys let us know what you think about the episode. Text us, or you can also leave us a link. If you click on the link on the survey, you can let us know what you think about this episode as well as other future episodes. We'll catch you guys on the next one. Peace.